Testing. 1, 2, 1, 2. And it's time for another one. I think I'm getting the hang of Stan Weinstein back again. And it's so funny, man. I got to chapter 10 of his book, the final chapter. I had some questions I wanted to answer concerning investors on my previous Secret Wars episode. Let's say there's no pullbacks. There's no 7% pullbacks, especially on the indexes. There was for the TSX, I had a stage 2. I had no pullbacks, no 7% corrections, and I got for the whole ride, the whole stage 2 ride. And it was time to bail. So the traders, there was a trend line. So the traders and investors took half the position, and the traders took the remainder half off the table when they violated the 30-week moving average. But I can't remember. I couldn't find any indication what to do with the investors. Was I still my initial sell stop below the launching formations of support, or did I miss a step? And finally, when I saw that in all cases he got rid of the especially towards the end of the stage 2, when the 30-week MA starts flattening out, the investor also bails at the when there's a violation of the trend line of the 30-week moving average. So that's when the 30-week MA starts flattening out. You're really starting to be in the stage 3. So you gotta bail, and then the investors are bailing there also. So that's good for me. At least it's not you get your profits there, and you don't have to wait for the stage 4 to complete and to re-trigger your sell stop from the original move. That just did not make sense to me. All right, what do I have here? AMD 5 years, weekly candles. I got my Stan 30-week SMA. I got my volume indicator. I got my RSI. I'm ready to rock and roll. Let's do this. Let's practice some more. Right now we had stage 3 going down, stage 4. Remember, don't need volume on stage 4 breakdowns. You need volume on stage 2 breakouts. Let's go back in time. What happened? All right, so let's say we're in AMD. We rode stage 4. And here, the traders and the investors, they got triggered out here. Most likely, the end of the line. If it wasn't here, then it's all the way down here. Well, the traders, I believe they would have been triggered out here. It says to never... traders don't even stay for 1 second once the 30-week MA is violated. So traders would have exited here. Investors probably would still be in there. And there's no reason for you not to get back in later. It says the cost of doing business. So I could have got triggered out here, but I could have had another pattern here and decided to, the traders could have decided just to jump back in here. But the further you are in the move, the less it's good an idea, because the MA is starting to flatten out, etc. If it starts to flatten out, that means you're closing the move, slowing down. All right, so right now I'm here. I would have drawn my pattern. See this candle? Oh, the pattern is not above the 30-week MA. 30-week MA is still going down slightly. Plus, I don't have volume. And I have the RSI, though, that's going above 50, going upwards. Not the triple confirmation. It's looking good, but we'd like to have volume, so we probably would not enter here. We'd wait for a few more candles. And Stan always says usually there's a 40-50% move already in the price action before you get in, and that's all right. There's still a lot more move to do. All you have to do is be patient and not stay in these candles. You have to let the market iron itself out. 1, 2, 3, 4, 5 weeks later. Trend lines Here, we still don't have a volume. But what we seem to have now is no volume, but we're starting to have a pattern above the 30-week MA, and the 30-week MA is flat, you see, and it might be starting to go up. So it's just a question of week. Every week, you just wait until you get that volume confirmation. And the volume is starting to pick up, down. We're still not in. You see, even this one here, if you would have went in, Stan did not trust it because it wasn't sufficient 2 to 3 times the average volume, I think, for the previous maybe 3 months. So you have to wait. This is still a bottom. So this is still stage one. Oh, volume picking up. Okay. This is our breakout line here. So maybe around the $3 line. Bottom of the formation. So time moved on. Chart morphed. So we have pattern. 30-week MA starting to go up. Moving average. RSI going above 50. Right here. Starting to move upwards. And yeah, we have to wait to break out of this candle. And after that, we should enter. Is there more volume? Oh, see? We didn't have the triple confirmation right here. We had the volume, we had the RSI, but we didn't have the breakout above the resistance line. That was the final piece. So what happens? Price action, it just floats around that resistance. Oh, there we go. Breakout. All right, we're in. We are in this one right here. So we're in at $4. Sell stop for traders 4 to 6% below the breakout line. So if the breakout line is at close to 3, 5% is 15 cents. And to be safe, you could always go to below the breakout candle and below round number. So round numbers are under $20. They're half of $1. So if 262.45, 48 there. So that'd be your sell stop right here. Kind of far. Maybe I'm misreading the round number thing. Maybe the round number is just the $3 and here would be enough. And the investor's way would be below, would be all the way back here. Below the launching pattern, the formation. Seems kind of far, but you're letting yourself wiggle room, and you'll see that with Stan, doesn't take much for you to be have your sell stop move up. And let me just check, and the RSI is going upwards, so we're above 50 already. Would have been fun to have a cross over the midline, going in positive territory, but RSI is going up, so it's good for us. All right, and remember, I have these. This is my zigzag. I added this. These lines. It's a zigzag, 7%, and every time there's a 7% correction or move, the lines from high to low they add, because for the sell stop, for the trailing sell stops, for the trader's way. Any correction under 7%, you don't move your sell stop up. It's too much noise. So 7% correction is considered less noise, and it becomes a valuable support. And I read an interesting thing today. The investors don't move your sell stop, your first initial sell stop. Don't move it up until you have 8 to 10% correction. So I might have to add another zigzag line just for the first move. So you see, here's the first pullback, 7%, and it's moving back up towards its. So for the traders, I put it right under here, just an eighth of a point under. So for the investors, for investors to move it under the MA, I need This would have needed to be 8 to 10%. All right, let's move it up. Traders are already almost in the positive, and the investors' way. Oh, there's a lot of pullbacks and corrections. Traders move up here. Investors move up here. And 7%, 10%, 7%. And investors have been moving it up high. Traders are already in the profit zone no matter what happens. And if you see an important trend line getting drawn, forming, trend line is good for investors and traders. You take half your position off a violation of the trend line. And a trend line is minimum 3 points. And the more points it is, the more valid or strong it is. So now we have 1, 2. We could say 3 points. Yeah, we could say we have a valid trend line here. So any violation of that, we take half our position off. There we are, another pullback. And investors still far off. All right. So right now, okay, a lot of things just happened here. Right here. Okay. I have a rule that the pullbacks, before you move your sell stop, you have to go back to at least 3/4 towards the previous high for the correction. And right now, it went back up almost 3/4. So at this candle, would have put sell stop right there for the traders, investors under the moving average. And let's see what happens next. All right. Traders triggered out complete half, not completely out here. So traders would have taken your profits. This is the ride for the traders. You're out. Yeah, traders sold right there. And investors, it would sell, have the position right here at the 30, when the at the break of the trend line. 1, 2. One, 2, 3 points. Yeah, there's a lot of points there. You would have taken half of your position right there, and you still have half of your position in the stock. Sell stop. Correction. Almost back up. Is that half? 1, 2, 2.5. You could have moved your sell stop here. Here it's where it gets tricky. When the price action, when the MA starts slowing down, and you're maybe when the trend line gets violated, the investor sell stop, trailing sell stop, you manually put it as you would a trader. So right now we have a choice: either we keep it here, or I do it. We started putting it the trader's weight for the investors. I believe right now, I would put it right here, the trader's weight, if I'd be an investor. Okay, moving up. Pull back. Another pullback here. And after the price action goes up, almost 3/4 of the way. Then you put it here under this low, and then it continues. Remember, the traders, they might get whipsawed out, but there's no reason for you not to go back in eventually. So if you see that here, you have another takeoff pattern. Same way we had a stage 1 here. If you have this consolidation pattern right here, and you have even better, you have the volume on the breakout, you have the RSI going up, the traders could actually come back in here, put their sell stop 46% under. So right now the trader's way would have been back in the stock, and the investors are still in. And the more I think about it, the 30-week MA hasn't been flattening out that much, so I would have been moving my sell stops, but I believe I wouldn't have put them still close to here. I would have still been here, going up, going up. And I'm wondering if an investor's way, as the trader could get back in, if this is an occasion to add more position. I'll have to reread. So can we add positions? I actually had a question I wrote back a while back, and I just didn't follow in the chapter where it talks about adding positions again. Is this an occasion for people who missed their initial move to get back in? If investors or traders didn't get triggered out, but they still want to add, is this a good place to do it? I would say so. The traders could get back in. Why not add position if you're still in the trader's way? All right, let's add more candles. Okay, 7% pullback. So the traders already have moved their sell stop here from entering here, minimum risk. And investors move the sell stop right under a 30-week moving average. And there's a correction. Pull back to previous highs. And traders, see, already still in the profit. Investors' way, move the sell stop. Everybody's in the profit. Nice stage 2. And the importance of Stan's way is to maximize the system built to maximize running the stage 2. If it lasts 1 year, 2 years, 5 years, 10 years, it maximizes because it's built on the stages. The 30-week MA really giving guidance on the trend. So when you remove all the zigzag of the candles, the moving average is always smooth, as you see here. So it's really the angle of the moving average telling you the real picture of the trend. It's a real good indicator for trend. To remove all noise, I can remove all the price action, and just like the trend, and you really know where the price is going. The rest is noise going around, sometimes going a little higher than the moving average, sometimes maybe going lower, trying to find its way. But when the moving average is going up, that means the price action is usually on top of it. It's pulling it upwards. If the price action starts going under the moving average, it will flatten out because you'll have numbers under that moving average, and that's either a stage 3 or a stage 1. That's why when it says for traders, when there's a violation of 30-week moving average, you're out. You're going to put your money in another stock that's exploding here. You might miss the rest of the move, but he says take that money, put another stage 1, or if you have another continuation pattern, put it there. But it's always better to put your money in stage 1s, even if you exit early, because you have the momentum on your side of a big base and a breakout where you have better chances of not getting whipsawed out and wasting time. It's not a question of pride to see how far I could go. I guess the top, I came close to the top, I guess the bottom. That's like completely useless. Really focus on putting your chances on your side to end in the money and as long as possible. All right, let's talk. Let's see. Pullbacks, 7% pullback. Move back to the price action. Largest candle here. Investors move it just up a little bit here. And we see we would have been triggered out this candle here. So we're completely out here for the traders again. And investors is still in the action of the initial position. So there's another gain right here we would have done with the traders. Here to here, which is not bad. You see the gap between where the traders exited here and entered here. That gap is just, well, it's like a fictive cost, but it's a cost of doing business. It's just like the insurance of having to wait for this wiggle action here. Because you see, you exited off the trend line. Then 1, 2, 3, 4, 5, like 5, 6, 8 weeks, 2 months, 2 months and a half. You're going sideways. And that system is built for you not to stay in sideways action very long. It goes up or it goes down. Fast, either direction, but you don't tolerate just staying in a trade going sideways. That's a trader's way. That's why he also has the investors. If you don't mind staying in a stock 1 year and you don't mind drawdowns or sideways patterns, investors for you, always under 30-week moving average. So that's pretty nice demonstration of advantages and disadvantages of each of those trading techniques within Stan's global trading framework. All right, I'm just going to draw a line here because I see maybe there's a sideways pattern. And keeps moving up. Do we have a new trend line? Let's see. Need three spots. So right now we don't have anything. So it's not valid yet. All right, let's add some more candles. Pull back, 7%, go back up. So investors right here, another move. Let's keep an eye on that if there's a valid trend line is going to form. You know what, I'm going to keep this line out. And yeah, stands its work. This looks like a lot of work. I say it sometimes. Maybe it's not that much, considering that maybe it's just like every week or so, you go look at your chart and you update it. Could we say these as a trend line or not? 1, 2, 3. Okay, let's say it is. Oh, okay. So what's happening here? So now on this candle here, or this, yeah, I'm not sure. It's not touching. It's very close though. But I'm going to count it as a beginning of a trend line. Trend line violations, reminder. Okay, this candle here. Trend line violations. Investors or traders have the position. Traders has been completely out here. When we had that pullback. And hold on. Okay. Investors have half the position. We took it out here. Here's the remainder half position right there of the investors. And now when I did this arrow, it was just the traders that went back in. But essentially, it could have been, it should have been investors adding position. The traders probably would have taken a full position, 1%. And the traders could have taken half a position, the half position that they exited here. They would have entered here. So when we'd be writing up here, it'd be only half of the investors' money that you would take out. And either case, after that next candle, violation of the 30-week moving average. And it's starting to flatten out. We had a sideways action for a while. I believe the investor here, I would have bailed. And if I'm not correctly, there's a back correction, move almost more than half. Would have had our sell stop here. So either you're fast enough and you sell here, or that candle is going to get you here to your previous sell stop. All right. Sometimes it's clean, sometimes it's less clear, but so let's do the final tally for the investors. Add arrow. And here's the investor's way. Half the position here with the traders. And have the position right here. And we broke the trend line. So that's a pretty sweet move. We have a bunch of everything right now. We had the sideways move, adding onto your position or getting back in, continue the stage 2, violation of trend lines, selling half of your position, violation of the 30-week moving average, dumping everything, or hitting your sell stop that you had right underneath it from the last correction. All right, and look at that, what happened. Meanwhile, the RSI has been going down. And when you take a step back and you look at it, lots of sideways action starting to form. This is possibly a stage 3 right now. So now we're out. And what's happening? You see the price action? You have some price action under the 30-week moving average. That means it's flat. It's going to start flattening out right now. It's like in the last stick, the price action has to be far out, far away to really pull it up to have an aggressive angle. And the closer the price action gets to a moving average, the more it's going to slow down and flatten out. And let me just redraw my trend lines right here. That's probably the next launching pattern. So remember, stage 3s can continue back in stage 1s. They don't have stage 2s. They don't have to be a total meltdown. And price action won't close above. And look at that. It's so beautiful. We didn't catch a top, but we did catch pretty damn close from that top. And you saved a lot of time, that wiggle room, that stress. So you sold at the beginning of stage 3. So I've seen it over and over, stand system. Don't get mad if you're getting triggered out. If you do it the correct way and you respected the 7% correction and you put it under a 30-week moving average, and even the trend line, sometimes you say, the trend line, will the price continue? These are important signals. That means something's happening. The trend line's violated. You're not in that upwards movement at the same angle anymore. There's possibility for a sideways move, and we're seeing it here. Look at all this congestion. And the moving average is actually turning down right now. And this could actually be a stage 4 right here. So right now I could actually make a case that AMD is stage 4. You don't want close by support. So it might be there's some support here. But right now what seems to happen is a breakdown below the 12.25 and pull back to test, and now seems to be one going down. RSI, it's a double confirmation for unless somebody has a fear indicator, maybe a volatility index, maybe Stan didn't have back then the days. He doesn't look at volume for breakdowns. It's only fear and RSI. So fear, how do you quantify that? I'm not quite sure. Maybe, what is this? I don't know. So right now we have to trust on that you identify correctly the pattern, the important support that's being broken down of, 30-week move average going down. This seems like a beginning of a stage 4. So what do we do? If you miss our original candle, you could have actually waited for a pullback, a test, and see if it would have actually went down. So we could have entered here, and that's exactly what you should have done if you didn't miss it. Right here, this candle here, you enter here, 46% above the breakdown line, 60 or 90 cents, maybe around here. But if you want the investors, it's above the pattern's resistance. And traders, if you don't like being halfway, not being protected by the wick of a candle, you could have put it back higher, I guess. Or else just follow the 4 to 6% and put it there above a whole number. Yeah, that makes more sense. All right, so what happens? Price action goes up, 7% retrace. So traders move the sell stop right here. Stan says you need a 8 to 10% correction for the investors to move. So if that was more than 7, let's say it was 8 to 10, you would have moved that sell stop right above the 30-week moving average. Okay, price action goes down. Correction, price action goes back down even more. So investors, sell stop, you would have moved it above 3-week moving average. And traders, you would have moved your sell stop right here above this candle here. So traders, you're already in the green, barely, or neutral. And investors, this was 1% of your NAV from entry to buy stop. And right now you moved it more than 3/4 of the way. So at worst, you're going to lose 1/4%. Oh, okay. Traders, you're out. You got triggered out here in this candle. Wait. Correction. Pull back. And no, the price action didn't go back towards the... So traders, you're out here. So that was a neutral trade. Investors, you're still there. And investors are out for a little loss. So not quite ready to break down in the stage 4. Maybe this is the bigger pattern right now that's being formed out. That close by support Stan does talk about it, and you see my subconscious, I just refuse to accept it, and the price action actually played around this area, didn't want to go down, and around number $10. And that's why you have your money management. You don't risk more than 1% per trade, and you move your sell stop, and then you barely took a hit, so that's pretty nice. And you get to have your bullets to try one more time or try again when it really breaks down. So this really seems, this is solid stage 3 right here. And how many more candles we have to do? Price action still goes around, and that's where we are today. So wow. All right, this is any moment. I'm going to put my alerts for AMD. This looks like a nice short. If price action breaks below 10, will be below the pattern, below the 30-week MA. And with an RSI going down. For the upwards scenario, for a continuation of the stage 3 into a stage 2, well, I'd have to have a close above 1458. Hopefully the 3-week average going up, and with the volume, of course. Wow. All right, AMD. Was a nice ride up. And right now you just seem to be stagnating in a stage 3 for the better past of a year. Yeah. So don't waste your time in the sideways action. A lot of people could have, they're staying here month after month and just paying their attention on the stock, while they could have just followed Stan's simple rules, exited on the trendline break, exited on the 30-week MA violation, and just put that money in another stock that was in this situation right here. So all this time you spent here, it's like you're playing this twice. You could have had twice these gains with another stage 2 that would have went up at the same rhythm. Efficiency, guys. All right. Forget AMD. I don't care what makes apples, bananas. Forget that. Doesn't matter. Charts. Just look at the charts like it's a game, a video game, and remove all your emotions. And keep practicing, guys. All right, man. What? That's so long. But it was worth it. All right, guys. See ya.